Whoa. Good morning. I believe the hour has come to commence our meeting. So my name is Scott Quist. Can everyone hear that? How is the sound? Okay, great. My name is Scott Quist. I am the Chairman and Chief Executive Officer of Security National Financial Corporation, and I welcome you to our annual meeting of the shareholders. Let's see, we do have scripts. I should point out the reason for the scripts is to allow a good flow for the meeting. Please don't feel that you cannot make comments or that you can't make motions. We'd be happy to have, well, motions that are that the chair entertains. But anyway, the reason for the script is just to keep the meeting moving smoothly. So I hereby call this annual meeting of the shareholders to order. And again, it is a pleasure to welcome you. At this time, I would like to introduce, I guess I was going to call it our head table. I'll call it our side tables. I'll start with first, I will excuse Mia Love. Mia is has been a director for 3 years and is on the Nominating and Corporate Governance, Compensation and Audit Committees. As some of you might have heard in the popular press, as it has been announced several times, she has a cancer, a brain cancer, and has been receiving treatments for the last several years. And she is in the midst of one of those treatments right now at Duke University. So Mia will not be attending the meeting, at least live. I invited her to attend virtually. I don't know whether her treatments will allow that or not. But anyway, we wish Mia the best and and send her our best regards. We'll start with on my, what I will call my right, with Alexandra Mysore. She's been a director of the company since 2021, so 3 years. She's founder and chairperson of Mysore Industries, a multinational conglomerate involved in manufacturing, e-commerce, media, trading, and investments. She received a Bachelor of Arts from the University of California at Berkeley in interdisciplinary field studies. Next to Alexandra is Mr. John Cook. Mr. Cook has been a director since 2013, or for the past 11 years. Mr. Cook is on the Nominating, Corporate Governance, Compensation, and Audit Committees. He is the co-owner and operator of Cook Brothers Painting and attended the University of Utah. To us, as some of you know, we are rather heavily involved in construction lending and in builder programs, and we view Mr. Cook as an integral part of those decisions. Next to Mr. Cook is Mr. Gilbert Fuller. Mr. Fuller is the chair of our audit committee. He's also on the compensation committee, the executive committee, the nominating and corporate governance committee. Mr. Fuller has been a director since 2012, and I still am surprised, Gil, that it's been 12 years. It goes fast when you're having fun. He is retired from USANA Health Sciences, where he was the chief financial officer and the executive vice president. Gil has a Bachelor of Science degree in accounting and an MBA degree from the University of Utah. Next to Mr. Fuller, we have Mr. Moody. Mr. Moody is the chair of our compensation committee. He's also on the nominating and corporate governance committee. Excuse me, he's the chair of the nominating and corporate governance committee. He's also on the audit committee and the executive committee. Mr. Moody has been a director since 1995, or 29 years. He's the president of H.C. Moody and Associates. I'll let Craig tell you what they do. They used to do more lobbying. Now I think it's now more real estate management, but he's also the former Speaker of the House of Representatives in the state of Utah, the Majority Leader, the Rules Committee Chairman, and Executive Appropriations Committee member at the Utah House. He's also a former chairman of the Utah Republican Party, former Republican National Committee member. Mr. Moody received his degree in political science from the University of Utah. Next to Mr. Moody, I believe, is Mr. Robert Hunter, Dr. Robert Hunter. Dr. Hunter serves on the Compensation Committee, the Nominating and Corporate Governance Committee, and the Medical Committee. Dr. Hunter is our second longest tenured director at 26 years. Dr. Hunter currently serves as chairman of the Board of Governors at St. Mark's Surgical Center. He's an adjunct assistant professor at the University of Utah in the Department of Surgery. He's past department head, and I really worked on this otolaryngology. How was that? That is a difficult. I actually practiced that this morning. I thought I got it. At least I said it this time. Which is head and neck surgery at Intermountain Medical Center, past president of the medical staffs of Intermountain Medical Center and Cottonwood Hospital. He has Bachelor of Science degrees in microbiology and biochemistry and an MD degree from the University of Utah. I'm going to go kind of in circular fashion. So we'll go to Mr. Jason Overbaugh. If maybe you could just raise your hand, signify. Director of the company since 2013. He is Vice President, National Marketing Director for Security National Life Insurance Company and for all our insurance companies. He's Vice President, National Marketing Director since 2006, so 18 years. He has a Bachelor of Science degree in finance from the University of Utah. To Mr. Overbaugh's right would be Mr. Andrew Quist. He is on the executive committee, and he's vice president, also a vice president general counsel of Security National Financial. Mr. Andrew has been a director since 2013, or 11 years, and a vice president of the company since 2010, or 14 years. He's also been general counsel since 2017. Mr. Andrew is president of Security National Mortgage Company for the last 2 years. And I guess you'd say those are the best 2 years of his life. I don't know. That's been a rugged environment. And for those who just to refresh everyone's memory, we had the death of Mr. Paul Christensen, who was head of our production in February of 2022, I believe. And at the same time, we had the retirement of the president of Security National Mortgage, I believe, like in April of 2022. And at that same time, that's when interest rates were accelerating rapidly. Volumes were correspondingly falling rapidly. And Mr. Andrew was elected as president. So great timing. But anyway, we appreciate the efforts there. Andrew is president of our mortgage company. He has a Bachelor of Science degree in accounting from Brigham Young University and a Doctor of Jurisprudence degree from the University of Southern California. On Mr. Andrew Quist's right is Mr. Adam Quist. He's Vice President, Assistant Secretary, and General Counsel of Security National Financial. He's been a director since 2021, or for 3 years, so he is the lowest tenured director. He is president of Security National Life Insurance Company and of our memorial cemeteries and mortuaries. Mr. Adam has a Bachelor of Science degree and a Master of Science degree in accounting, both in accounting from Brigham Young University and a Doctor of Jurisprudence degree from the University of Utah. To Mr. Adam Quist Wright is Mr. Garrett Sill. Mr. Sill is our Chief Financial Officer, Treasurer, 401k invest. He also is a member of the 401k Investment Committee, our non-qualified deferred compensation plan, and our non-qualified deferred compensation plan investment committee. Mr. Sill has been the Chief Financial Officer and Treasurer since 2013, or for 11 years. He's a certified public accountant, has a Bachelor of Arts degree in accounting from Weber State University and an MBA from the University of Utah. To Mr. Sill's right would be Mr. Jeffrey Stevens. So this will be our final introduction, at least of interior people. He is the Secretary, Senior General Counsel, and on the 401k Trustees Committee. He has been the Senior General Counsel since November of 2006, or 18 years. He's been Secretary of the company since 2008. He has a Bachelor of Arts degree in geography. So if you have any questions about geography on the way to get here, from the University of Utah, and a Juris Doctorate degree from Brigham Young University. I would also like to acknowledge Wes Yeomans and Andrew Smith, if you could raise your hands, or they are representing Deloitte and Touche, our certified public accountants, and Dane Johansson. Dane, there's Dane from Parg, Brown, Gee, and Lovelace, our securities counsel. So as chairman of this annual meeting of the shareholders, I hereby appoint Richard Dahl, Kevin Cantwell, and Lori Earl to serve as members of the Attendance and Balloting Committee, and appoint Mr. Richard Dahl as the chairperson thereof. If there is anyone here desiring to vote in person, you should have already registered your name and received your ballot. If you have not, please register with Mr. Dahl at the registration table. And Richard, if you could stand, let everybody know. Oh, there you are in the front row. I was thinking you were going to be in the back, but so anyone who desires to vote in person or change their vote, please speak with Mr. Dahl. I hereby appoint Mr. Jeffrey Stevens, our Senior General Counsel, to act as parliamentarian of the meeting. Excuse me. In order to conduct the meeting in an orderly manner, I would ask that all questions from the floor, other than specific questions related to a motion then being considered, be limited to a general question and answer session, which will follow my report, the president's report. Accordingly, so that all shareholders will have an opportunity to participate, each individual shareholder will only be permitted to ask one question at a time. When that question has been answered, the shareholder who has asked the question will then relinquish the floor, and any other stockholder who desires to ask a question be permitted to ask their questions. I would suggest, though, that any questions that relate to personal or unique items to the stockholders, such as number of shares owned, mortgage properties, pre-needs and mortuary products, policies of insurance, anything that was personal nature, if you could direct those questions to the appropriate officer after the meeting. I would like to now call upon Mr. Jeffrey Stevens, Secretary of the company, to report to the stockholders on the formal steps taken in connection with the calling of this annual meeting of stockholders, and to present evidence of the giving of the necessary notices. Mr. Stevens.
Mr. Chairman, our board of directors adopted a resolution authorizing that the annual meeting of stockholders be held today, June 21, 2024 at 10:00 a.m. in Salt Lake City, Utah, and to affix the record date for the meeting as the close of business on April 15, 2024. Representatives from our transfer agent, Zions Bank, are available at this meeting with a listing of all stockholders and their respective addresses. As of the record date of April 15, 2024, there were 19,300,897 votable shares of Class A common stock and 2,935,963 votable shares of Class C common stock, for a total of 22,236,860 votable shares of the company's common stock outstanding. Accordingly, under the bylaws of the company, 11,118,431 votable shares are a majority of the outstanding common stock and constitute a quorum for this meeting. I provided a certificate executed as an officer of the company certifying that notice and instructions regarding voting were duly and properly sent on April 23rd, 2024 to each holder of Class A and Class C common stock entitled to notice thereof.
Thank you, Mr. Stevens. I would direct the secretary to file a copy of the minutes of this meeting together with a certificate evidencing the giving of evidencing the service of the notice. The Attendance and Balloting Committee has been asked to make a report of the stock represented here, either in person or by proxy. Will the committee please report?
Mr. Chairman, the Attendance and Balloting Committee reports that shares of both the Class A outstanding common stock and the Class C outstanding common stock representing more than majorities of such shares are present either in person or by proxy.
Thank you, Mr. Dahl. Since a quorum has been established, we'll proceed with the business to be conducted at this meeting. Anyone desiring to vote in person, again, please identify yourself by raising your hand. Seeing none, copies of the minutes of last year's annual meeting of the stockholders are available for any stockholder to read. We would entertain questions later in the meeting with respect to those minutes. At this time, the chair will entertain a motion to dispense with the reading of the minutes of last year's annual meeting of the stockholders.
Mr. Chairman, as a stockholder of the company, I move that we dispense with the reading of the minutes of last year's annual meeting of the stockholders.
We have a motion, we have a second to dispense with the reading of the minutes. And I have to say, I'm happy to have them read if anyone desires to have them read. Mr. He brought his reading glasses. But we have a motion and we have a second that we dispense with the reading of the minutes of last year's annual meeting. All in favor signify by saying aye. Aye. Opposed, nay. The motion carries. I know of no old business pending, and accordingly, we will open the floor for new business. I will now entertain a motion as to the nominees of the Board of Directors to be elected at this meeting.
Mr. Chairman, as a stockholder of the company, I nominate the following 10 persons to serve as directors of the company until the next annual meeting and until their successors are elected and qualified. Scott M. Quist by Class A, Alessandra Mysore by Class A, S. Andrew Quist by Class A, John L. Cook by Class A, Jason G. Overbaugh by Classes A and C, H. Craig Moody by Classes A and C, Robert G. Hunter by Classes A and C, Gilbert A. Fuller by Classes A and C, Mia B. Love by Classes A and C, and Adam G. Quist by Classes A and C.
Thank you. We have the following nominees: Scott M. Quist, Alexandra Mysore, S. Andrew Quist, John L. Cook, all to be elected solely by the Class A shareholders. Mr. Jason G. Overbaugh, Mr. H. Craig Moody, Mr. Robert G. Hunter, Mr. Gilbert A. Fuller, Miss Mia Love, and Mr. Adam G. Quist by Classes A and C. Do we have a second to this motion? Are there any further nominations from the floor? Seeing none, we have the nominations of Scott M. Quist, Alexander Mysore, S. Andrew Quist, John L. Cook as directors to be elected by Class A voting alone. Directors Jason G. Overbaugh, H. Craig Moody, Robert G. Hunter, Gilbert A. Fuller, Mia B. Love, and Adam G. Quist to be elected by Class A and C shareholders. The chair will entertain a motion that nominations be closed.
I move that the nominations be closed.
I have a motion that nominations be closed. Do I have a second to that motion? It has been moved and seconded that nominations be closed. All in favor signify by saying aye. All opposed or any opposed, nay. The motion carries. We'll now vote on proposal number 2. I will now entertain a motion to ratify the appointment of Deloitte and Touche LLP as the company's independent registered public accountants for the fiscal year ending December 31st, 2024.
Mr. Chairman, I make a motion to ratify the appointment of Deloitte and Touche LLP as the company's independent registered public accountants for the fiscal year ending December 31, 2024.
I have a motion. Do I have a second? It has been moved and seconded that the appointment of Deloitte and Touche LLP as the company's independent registered public accountants for the fiscal year ending December 31st, 2024 be ratified. All in favor signify by saying aye. Any opposed? We will be giving the tally. I'm probably a little out of sync there. We'll be giving the tally later of the votes here by in attending by proxy. Now the reports, we'll move to the report section of our meeting. We will have 7 reports. Let me just introduce them, and then we'll just flow according to the order of introduction. First, we'll have a report from Mr. Garrett Sill, our Chief Financial Officer. He'll be giving a financial and the treasurer's report. We'll then have a report from Mr. Adam Quist regarding insurance financials and operations. Then a report from Mr. Jason Overbaugh relating to insurance sales and builder relationships. Report from Mr. Jamie Meredith regarding our insurance assignment investment activity. A report from Mr. Stephen Keel regarding our cemetery and mortuary companies. A report then from Andrew Quist regarding our mortgage company. And the meeting will proceed to that point. Mr. Sill.
Thank you, Mr. Chairman, and good morning to the Board of Directors, fellow employees, and other shareholders. It's my privilege now to give just a very quick and brief report on the financial of the companies for the last couple of years. We'll jump right in and look at net earnings. Looking over the past 4 years, our net earnings averaged about 33.8 million. Our earnings in 2023 of 14 million represent about a 57% decrease over 2022. But on a positive note, that 14 million is up 3% over the prior 4-year average. So in spite of a negative trend line, there is some optimism, especially as we look at the other segments. If we were to look at a trend line on this graph, looking at the earnings of each segment of Security National Financial, you would see a positive trend line for both the life insurance and death care segments. And then you'd also see a negative trend line for the mortgage division as they struggled, as Scott mentioned, with increased interest rates for most of 2023. Looking at our revenues, it's no surprise to see the same thing as income generally follows the revenues. Also a negative trend line for our revenues for this year, down about 23%. But as I alluded to in the other previous slide, the earnings and the revenues for both the life insurance and the death care segments were increasing over the same period. So we're excited about that. Looking at our equity, comparing to 2020, that same 4-year period, we ended up 2023 with 313 million in stockholders' equity, which represents a 19% increase. So we're excited about that continued growth year over year, and especially during that 4-year period. Looking at our assets when compared to 2020. As shown on the slide, we did dip below the $1.5 billion mark for our assets. So our current assets at 1.431 billion represents about an 8% decrease. And this next slide will kind of dive into a little bit how that's broken up. And so we can see where some of the decreases are. When looking at how our invested assets our assets are invested, excuse me, we're pretty flat year over year, and it's kind of a rounding issue there. We have about 1.2 billion of the 1.5 and the 1.4 billion assets respectively invested, earning income for the company. I'd just like to draw out one particular item here, and it's going to be this box here compared to that box. So while the invested assets remained relatively flat over the 4-year period, the makeup of how those assets are invested are considerably different. The two that I pointed out to, this would be loans held for sale, which would be directly related to our mortgage company originations. 33% of our assets were in loan held for sale compared to 11% this year. So that kind of matches what Scott was discussing, I'm sure, which Andrew will discuss in his segment, that mortgage originations were down. So what did we do with that? Well, you can see a few things that we did. We did purchase more. This is our bonds or our fixed income securities. We did increase the purchase for that because where the market interest rates took away from originations for the mortgage company, it allowed the life insurance company and even the death care segment to invest their idle cash into a higher yielding fixed income securities far and above what we were able to do back in 2020. I want to say that in 2020, we were purchasing corporates at maybe just a little north of 3%. For most of 2023, we're probably north of 6%. And so that's a good difference for us. And then one other item to point out, as Scott mentioned, Jamie Meredith will be talking about one of the significant investments that we have on our life insurance side, which is fast funding. And this little piece of the pie here, this 5% and 6%, represents the bulk of what Mr. Meredith will be discussing. Looking at our first quarter real quick, we had a wonderful first quarter for Security National Financial. From an operational perspective, it was the best first quarter that we had for both our life insurance and our death care segments. It should go with note that the mortgage company made a considerable steps to reduce their year-over-year loss in the first quarter as well. So we were very pleased with the results of the first quarter. Last year, I took some time to talk a little bit about the Russell 3000. I'll do that again today. I'll be hopefully brief about it. But last year, this slide announced that Security National Financial Corporation was an addition to the Russell 3000. Unfortunately, this year, this slide represents us being deleted from that index. A couple highlights there. April 30th is rank day. And pretty much take the outstanding shares of the company, multiply it by the stock price, and you come up with your market capitalization. The cutoff for inclusion in the Russell 3000 was 150.4 million. In 2023, it was 159.5 million. So because of the market, the threshold was lowered a little bit. As we do our calculations, we came up with 151.4 million as our market capitalization. And I've had considerable conversations with the Russell 3000 in regards to a different calculation because their number shows that we should be included. I finished my last call with them on Tuesday of this week. And they responded back 30 minutes after that phone call that their decision was final, that in spite of our calculations, they're going with their calculations, which they didn't divulge what they were, but we are continue to be on the deletion list. So I'm a little sad to see that happen. But for your information, the reconstitution, which is the reshuffling, happens next Friday. And so you'll see some significant trading of the company's stock. Final slide for me is just talking about a couple of accounting pronouncements. You'll notice that ASC, which is current expected credit losses was adopted by the company in 2023. Added a few pages to our 10K, so I apologize for that, but I'm pleased with that implementation. Looking forward to 2025, the new standard adopted by most large filers on the life insurance companies is called LDTI, which stands for Long Duration Targeted Improvements. And for Security National Financial, we will implement that Q1 of 2025. So I'm happy to report that our systems implementation has been completed. We have comparative numbers that we'll be able to report with. And our first look for the shareholders will really be that Q1 2025, where we look at how implementing this new accounting standard affects the financials of the company compared to 2024. And I suspect that at this time next year, I'll spend a little more time going over that. But I will note that the most significant effect for that implementation of the standard will affect other accumulated comprehensive income, or OACI, which is a component of our equity section. And with that, Mr. Chairman, that'll complete my report.
Well, good morning. It is good to be here with you this morning. Scott mentioned my name is Adam Quist. It's my pleasure to be here today reporting on our life insurance companies. Reporting alongside me today is Mr. Jason Overbaugh, who is our National Marketing Director of our life insurance companies. I'll be covering some financial and operational topics, and then I'll turn the time over to Jason to take a little deeper dive into our sales reports. I wanted to start out today by briefly covering what we do and why we do it. So what we do is we really provide or fund small face value life insurance products, the primary purpose of which is to cover a person's final expenses. There's a couple points I'd like to make regarding what we do. The first is that really these products are designed to serve an underserved and underinsured market. It's a very blue collar market. And I think that's something that we as a company should be proud of, that we are helping to fulfill that need in our community. The second thing I'd like to point out is that, as I mentioned, these policies are designed to cover a person's final expenses. And in fact, in most, if not, well, in many, if not most instances, the person is actually planning their funeral at the time they're buying this insurance product. So that leads me to my third point, is that because the policyholder is buying these to cover their final expenses, these are not viewed as investments by our policyholders. They truly are viewed as an insurance policy that they're going to hold for their life, that they will then realize the benefit of as they pass and their loved ones don't have to cover their final expenses. The result of that is that we have a very stable block of business. These policies tend to be very sticky. The reason I wanted to point that out is in the last 24 months, we've obviously had a rising rate environment, but our block of business has been remarkably stable. And that's a strength of Security National Life, that these policies that we produce are a very sticky, stable block of policies and don't move in and out with interest rate environment. Now, talking about why we do it, our purpose is really threefold. We view that we're protecting the financial futures of our policyholders, our shareholders, and our stakeholders. Now, those first two are probably self-explanatory. I do want to make a remark on the third category, though. We view our stakeholders to include both our employees and the agents who choose to associate themselves with Security National. For obvious reasons, I won't speak of specifics, but in the last 30 days or so, two of our competitors have chosen to exit either the pre-need or the final expense space. And those are two spaces that we are very active in. So at Security National, we take great pride in the fact that we are building a company and that we are a stable foundation that our employees and agents can build a career on, that we're not moving in and out of spaces. And again, I think that's something that we should be proud of, that we're creating a company that is a place that agents and employees can call a long-term home. Now, it is my view that the best way that we protect the financial future of all three of these groups is to have a financially strong and profitable company. So let's talk about the year that was 2023. You'll see that in 2023, we earned just over $25 million. That was compared to $14 million in 2022 for a 78% increase. And in fact, 2023 was the best operational year in our life insurance company's history. And to me, that's something that we as shareholders should be proud of in this environment. And I'm very grateful for our employee base and our agents who have made that happen, because that has certainly been a team effort. Now, how we did that is our revenues increased by 9%. That was made up by increase in premiums of a corresponding 9%, and our net investment income was also up 8%. Diving into the expense side a little bit, our total policy benefits increased 8%. Now, I will note that that's total policy benefits, so that includes both the current portion and the future portion, or in other words, the present value of the future policy benefit that we expect to pay out. But one thing I would note is that if we were to look at only the current portion in 2023 compared to pre-COVID, we still believe that our policy benefits were running slightly above pre-COVID trends in 2023. And lastly, on our expense side, our total sales, general, and administrative expenses, we were able to hold those roughly flat. And so that is how we were able to realize our best operational year in our company's history. Looking now at the first quarter 2024, in the first quarter, our life companies earned $8.5 million. That was compared to $3.4 million. So that was about a 130% increase over the prior year. And that was our best operational Q1 in our company's history. So again, I think that's something that we should be proud of. And I think our employees and teams deserve our gratitude for realizing our best year ever in 2023, and then our best first quarter ever on an operational basis in Q1 2024. Just as we did for 2023, we'll kind of look a little bit deeper. Our revenues increased 4%. That was driven by an increase in premiums of 7%, while our net investment income was up 2%. Turning to the expenses, our total policy benefits increased 2%. Again, that is a total policy benefit, so it includes the current and future portion of those benefits. But if we looked at just the current portion of policy benefits in the first quarter of 2024, we believe that we saw policy benefits return to pre-COVID trend lines. And so that was something that was encouraging for our business, is to see that block stabilize back to historical norms. And then lastly, we were able to achieve a 5% decrease in total sales, general, and administrative costs in the first quarter of 2024. So in my opinion, anytime you can recognize your best operational year in your company's history, followed by your best first quarter in company history, that's something we should be proud of. And personally, that's something that I am proud of. At the same time, I also acknowledge that this is a very favorable rate environment for the life insurance company. And in my opinion, we should be doing well in this environment. But that, to me, highlights one of the beauties of Security National Financial Corporation. While this is a great rate environment for our life insurance companies, it's a challenging rate environment for our mortgage company. But I have really admired the way that our mortgage company has navigated what I think is an extremely difficult environment for mortgage companies. And I just wanted to point out and acknowledge that, to me, it's my firmly held belief that Security National Life would not be enjoying the success we currently are if we did not have the pillar of strength the mortgage company is to the life company, because it is a very valuable investment tool for our life insurance company. So to me, my hat's off to our mortgage company, and they certainly have the gratitude of our life company for their performance in a very difficult rate environment. Next, I wanted to turn to a little more macro view. In the past, our company has been very acquisitive, less so in the recent history. And there's really one thing that I think is driving that I want to touch on. And that's over the past decade or so, private equity has really become active in the insurance acquisition space, meaning buying up insurance companies. Paraphrasing a recent author in the Wall Street Journal, the author commented that there are only two kinds of private equity firms, those who own an insurance company and those who want to own an insurance company. Now, I'm not sure that private equity's entrance into the insurance space has always been for the good of the industry. For the obvious reasons, again, I won't speak of specifics, but if you care to search the popular presses, you can see instances where private equity has bought up an insurance company and then arguably mismanaged those assets to the detriment of policyholders and stakeholders. But one thing I am confident of is that the entrance of private equity has driven up valuations of insurance companies. And as a result, we have been unwilling to, we've been committed to the discipline that we think is warranted in valuing a life insurance company. And so we've been unwilling to pay some of those premiums that other private equity firms are paying for insurance companies. So it's not necessarily a shift in our strategy that we're shifting away from acquisitions. It's simply a realization that there is a shift in the market for the time being. And we're simply unwilling to leave our discipline and go pay what we believe is unwarranted prices. But that has led us to focus on growth still. After all, our goal still is growth. And so we've been focusing largely on organic growth for the recent past. Now, this slide in front of you is certainly not all inclusive. It's just meant to be illustrative. In fact, I won't even talk about all the points on this slide, but I did want to touch on a couple of them. The first point you'll see is that we've strengthened our insurance premiums in 2 of our 3 divisions. That might sound easy to do. That has been about an 18-month process. That's been a very difficult process, both on the back end and for our sales force. It's involved a lot of time. It's involved a lot of market research. But we believe that we have now priced our premiums appropriately in 2 of our 3 divisions that will ensure our organic growth throughout the next several years, if not decades. But it will take time for those increased premiums to layer on. As the existing block of business, obviously we can't change those premiums. The next 4 bullet points really are just examples of both software and automation advances that we've made within our company that have helped drive some of our efficiency. And then the last 2 points really tied to our value and growth. We've introduced a new loyalty sales division and at the same time introduced the family loyalty support plan. And Mr. Jason Overbaugh will actually cover those in more detail in his presentation. So at this time, I'll turn the time over to Mr. Jason Overbaugh.
Good morning. Thank you, Adam. I was just sitting there thinking as Adam was presenting how grateful I am for him as a new president of Security National Life. He is a brilliant mind and one who is very collaborative in his striving to make us a great company. So I'm grateful for his leadership. As Adam noted, 2023 and Q1 of 24 were some of our best results ever. And I would like to echo what Adam said in sharing my gratitude of thanks to our employees and our team members who really made this possible and are making great strides in making Security National Life great. This first slide, I should be noted, Adam was sharing some GAAP numbers. These are statutory accounting numbers. But you can see the growth that's occurring in our collected premiums, which is primarily being driven by our distribution of new sales. You can see that we had a 10% increase or $11.5 million improvement over the previous year. And as we look ahead at sales specifically, we had a milestone in 2023, achieving nearly $60 million of annualized new sales. This was a 30% increase and a notable 16% increase in our core multi-pay insurance products. Those would be our highest margin products that really fuel the long-term sustainability of our organization. You'll note on the slide that we had 2,764 agents, or a 9% increase of producing agents for us last year, which is something we're quite pleased with. Now, as we look ahead, or backwards, I guess, at Q1 2024, you can see that we're sustaining our growth trajectory of new sales and our distribution, with each of our 3 distribution channels all contributing positively so far this year, which is something we're quite proud of after having a record-breaking sales year last year. As Adam noted, we rolled out and created a brand new sales division in 2023 called Loyalty Sales. We partnered with a group called Latinos Unidos, who are experts in the final expense space with specific focus on Latino-based business. This has been a tremendous lift for our organization in spinning up this new division. I couldn't go into enough detail about how much time individuals in our organization spent in making this possible. But today, the results are we're seeing nearly 51% of our final expense sales coming through this loyalty sales division channel, which is a tremendous success for our company, and one that is a building momentum that we will continue to enjoy for years to come. Now, as Adam alluded to, we rolled out a new product in 2023 called our Loyalty Family Support Plan. Now, what this is a funeral concierge membership where our members can consult with experts here at Security National in helping to identify funeral homes and help to plan funerals for their loved ones. Now, as you think about this tied to our Latino base of business, where English is not their first language, they need help in navigating sometimes the complex world of planning a funeral. And so this membership service that we've created is a great service to those underserved communities that Adam was alluding to. And what it does for the company is really 3 primary things. One, it drives more revenue, as again, it's a monthly renewal subscription or membership. It creates leads for our salespeople to go out and promote new sales for the organization. And then finally, it acts as a mechanism for rewarding our agents with higher compensation as they sell the membership service, but it also inversely reduces compensation if it isn't sold. So it's a way to reward agents for doing the right things, but also reduce our policy acquisition costs. So it's something we are quite excited about, and really we've just scratched the surface on what our potential is with this program and other future value-added programs that we have in the works or in planning stages for our company. So once again, I want to thank you for your support, thank our employees for the tremendous amount of work. As we look ahead, I could not be more optimistic about the future of Security National Life. I'm invigorated and excited to see where we go next as an organization. Thank you.
Good morning, ladies and gentlemen. It is a pleasure to be here and report on the most exciting part of Security National, insurance assignments. Some of you may ask, what is a life insurance assignment? Well, as someone passes away and they go to the funeral home and they hadn't already prearranged their funeral with, say, Security National Life, they have a couple of options to pay for a funeral. They can write a check, they can put it on the credit card, maybe pay cash. But really smart funeral homes allow families to use their loved one's life insurance policy to pay for that funeral. Now, it's a huge benefit for the family to be able to use the life insurance policy because they don't have to come up with any money out of pocket. However, it's a challenge for the funeral home because there's a lot of work that's actually involved. So a funeral home has a couple of options when it comes to dealing with an insurance assignment. The first option is they contact the insurance company. They verify the coverage. Now, what's interesting is some of you may not know because you're all very familiar with Security National, but most insurance companies aren't as easy to deal with as Security National is. As a matter of fact, even verifying a policy can actually be difficult. Sometimes it can take hours or days for a funeral home to actually verify that coverage to make sure it's a benefit that can actually be used for the funeral expenses. Then once the verification is obtained, it takes them 30 to 60 to 90 days to actually get paid on that funeral contract. So obviously it can create cash flow problems for the funeral home. The second option that the funeral home has is in dealing with us. They can send us that policy information. We can have it verified, processed, and funded for the funeral home in about, jumped ahead, in about 48 hours. So they're eliminating the challenges and cash flow delays that they have in processing an insurance death claim in-house. Now, what are some of the challenges facing insurance assignments? What would be like the mortgage company? Obviously, mortgage rates affect the industry. What kind of affects the insurance assignment space? Well, you guys know what we've been through the last few years with COVID and the pandemic. You can see the death rate increased in 2020, increased even further in 2021. And then as COVID declined, sorry. What are those? Those are actually deaths. Yes, I didn't double check. Those are actually deaths. Should not be dollar signs on there. Good catch there, Scott. So those are millions of deaths, 2.8 million deaths in 2019, 3.3 million in 2020, almost 3.5 million deaths in 2021. And in 2022, 3.2. And then in 2023, the total numbers are not exactly finalized yet with the CDC, but going back and looking at their provisional weekly numbers, it's going to come in somewhere around 3.1 million. Should be finalized sometime this month. As you can see, the death rate is starting to decline now. Obviously, fewer people dying, there's fewer families that are using insurance assignments. Another thing that's affecting the insurance assignment market is the cremation rate. As you see during COVID, the cremation rate increased dramatically. It took many, many years for the cremation rate to reach 50% in the United States. And in just a few short years, it jumped from 50 to over 60% now. So families that traditionally purchase cremation tend to spend less than families that purchase a funeral. And so families use insurance assignments less because they can actually afford to pay for that easier. And so there's several things that affect our space. Those are just two of them. Now, our financial results for 2023, we actually funded just shy of 51,000 funerals, or we could say we took 51,000 insurance assignments. That's a 3.3% decrease over 2022. We funded $421 million worth of assignments. That was basically flat over 2022's numbers. Now, what was great for us as a company, our net income off of that increased almost by 10%, up to 4.1 million. Our receivables at the end of 2023 were at 45.7 million. Now, Q1 2024, we've seen a continual increase. So we've actually been able to grow our market share a little bit in the amount of insurance assignments that we're taking on. We've brought on 118.3 million in total fundings in the first quarter. That's a 7.5% increase over first quarter of last year. And the total number of assignments at 14,000, that's about a 4.5% increase over last year. And total income, 1.3 million, about a 5% increase over Q1 of last year. Receivables at the end of the first quarter at 46.8 million, an actual decrease from the first quarter of last year, which is a good thing. So funding's actually up, the amount of assignments that we're bringing on up, but we're able to do it with actually fewer dollars outstanding. So that means we're actually collecting those insurance assignments from the insurance companies a little bit more quickly. And that is all I have for the group. Thank you, Mr. Chairman.
Thank you, Mr. Chairman, Board of Directors, and fellow employees of Security National. It's a pleasure to be with you today. My name is Steve Keel. I'm the Chief Operating Officer for our Funeral Homes and Cemeteries Division. To start off with my presentation, I'd just like to remind those in attendance and watching virtually what our mission is in our particular segment. Our mission is to provide customers with peace of mind and comfort, both while planning for and while experiencing end-of-life events. To me, I consider that responsibility a heavy load, but I stand here confidently and eager to report because of the team that I have the privilege to associate with on a daily basis. If we look at our 2023 financial operating results, as Mr. Sill reported, our net income before taxes was our best year ever, $7.9 million compared to $7 million in year 2022 year end. How we got there, if we look up once again to our mission of planning for and while experiencing, the while experiencing part comes from our mortuary division. You can see that the year 2023, we brought in just under 1.5 in earnings compared to 1.86 million, which was a 21% decrease. Now, within that, as noted in Mr. Meredith's presentation, some of our operational headwinds deal with a decreased death rate, which then puts the pressure on us in our operational environment to ensure that we're doing everything that we can to strengthen strategic partnerships with vendors, suppliers, as well as operating efficiently on those operational costs of labor and other expenses. The year 2023, I'll get into a little bit more detail, but you'll note that both in Utah and in New Mexico, we had some operational challenges. Now, I, like Mr. Overbaugh, approach this calling with optimism. I'm excited to report to you our Q1 results momentarily. On our cemetery side, I wanted to note that as a group in our cemeteries, 3.9 million in earnings compared to 3.6 for an 8% increase in a tough operating environment. Our Utah cemetery sales team put up the second best earnings results in its history in that year, second to only the year 2021, that, as you saw in Mr. Meredith's presentation, highest death rate. Also, I wanted to note that our California location, 600,000 in earnings, is the second best result for that location in its history, second only to the year 2021. So I'm excited in what holds going forward. Also, please note in the realized investment gains, 2.5 million is cash was deployed in investments from our operating funds, endowment funds, and our trust funds, which brought in just under $1 million growth, or 62%. As we move forward, another way to realize the graph that we just reviewed is noting once again that 2023 was our best financial earnings year in our segment's history, and growth was realized and achieved in our realized investments at our California cemetery, as well as our Utah cemeteries. 2024 Q1. In the first quarter, once again, our results best in the company's in our segment's history. The prior best was 2.3 million. We were able to come in first quarter at just under 2.5 million in earnings, compared to 2023's 1.8 million, growth of 39%. Once again, how did we get there? If we look at our funeral home division, we were able to achieve revenue growth in our funeral homes combined of just over 6%. In Utah, we had tremendous growth in what I would call our legacy brand of Memorial. And we struggled in our discount brand and in our brand on the back of the Wasatch Front. That's definitely in our attention. We've organized and reorganized our management structure and deployed the talent there to give eyes to those operations specifically. And I'm pleased with that decision, and they're starting to see the results thereof. Down in our New Mexico funeral homes, as they came in at 303,000 versus 116 in earnings, Mr. Joseph Molnar is our general manager that we brought in late fall of 2023. We have an incredible team down in our New Mexico operations, and he has been able to help both in COGS reduction as well as analyzing our labor and helping us become more efficient in that operation. On mortuaries combined in the first quarter, we were able to achieve revenue growth of 6%. We're able to increase our families served by 1%, and we're able to achieve growth in our average funeral sales volumes, contract averages of 4% in Utah and 6% in New Mexico, which in this challenging environment, I feel is an incredible accomplishment. On our cemetery side, we have an incredible team representing beautiful memorial parks, both in Utah, New Mexico, and in California. We came in at 105,000 in earnings compared to 805,000. So not real good growth. That's not the growth that we expect in our cemetery division. We've had a lot of reorganization in our sales teams across the board. We feel that we're getting talent trained and in place. And the focus there in the cemeteries where I see tremendous opportunity is simply returning to the basics. We know the prospecting funnel, we get back to the basics, we do what we simply know, what we excel at, and we put our best foot forward. You also realized our realized investment in gains for the first quarter are over $1 million compared to $500,000. As we continue to deploy and realize strategic initiatives there on those cash funds, it continues to be very advantageous to our segment and division. This slide here is just once again visual representation of what I just discussed. I would like to note that we have achieved growth in the first quarter on both our investments, our New Mexico cemeteries, our Utah cemeteries, as well as our New Mexico funeral homes. As far as comments in regards to our operations in the first quarter, I felt this was appropriate to share. As I noted, our theme over the past 18 months is to become brilliant at the basics. When it comes to our pre-need property sales specifically, as we do a 3-year look back on the first quarters of those years, we have pledged to be consistent, we've pledged to be determined, and we've pledged to show a willingness to work. As we've done that, you can see that consolidated, our pre-need property sales are up 15.6% on a consolidated basis amongst all 3 of our brands. Once again, in the market in which we are operating, I am extremely pleased with our sales team, with our grounds crew team, and with the volume of increased policies, our accounting team in our specific division. I also wanted to note, with those sales increases, we have a commitment to develop and to provide inventory, which sets our sales teams up to succeed. That is not common in our industry right now. A lot of people are deploying cash elsewhere, which then frustrates a lot of sales teams. We have a commitment here at Security National to ensure that our sales increase. We will go ahead and develop continued opportunities and inventory to ensure their future successes. This is just an example of one development which we finalized earlier this year. This was a very, very hard build because we had to come into this and match 3 existing buildings. And we came in on this project at only 1% over budget, which I believe in this environment is another incredible accomplishment of the team. I do want to note that we are in the design phase, approval phase, or construction phase at developmental projects in all 3 of our cemetery and mortuary brands currently. I wouldn't be able to be up here without looking through the window. And as I look out that window, I see an incredible team of individuals. And I'm humbled to work alongside them. This is the first year that we have applied for our best of state, and we've won that category in both the mortuary services as well as the cemeteries division within the state of Utah. Yes, we've won it every year, but we have never accomplished both category wins in the same year. I think that speaks volumes to our mortuary, our cemetery, our grounds, our operations, our accounting, our human resources, and our IT team here at Security National. And finally, in closing, where do I see this division going forward? We remain committed to what we've already agreed to, focusing on 2024. Commitments of improving our efficiency in our mortuary divisions. How will we do that? We will continue to nurture relationships in the industry, and we will continue to focus on top-line revenue growth. 2, grow cemetery land sales. We will do this by continuing our commitment to development, as well as our commitment to holding weekly training meetings with our sales teams. Number 3, our commitment to grow market share. How will we accomplish this? We will leverage technology both in-house and outside, and we will continue to focus on our community outreach efforts to strengthen our brand in the markets in which we have a presence. And then number 4, as we seek investment opportunities for our cash, we are disciplined in the deployment of our cash. We do not just react. We study it out. We have consensus through collaboration, and we deploy cash in a strategic manner. It's been noted that excellence is the result of high intention, sincere effort, and intelligent execution. Our goal is growth. Our motto is excellence. That is my report for the Mortuaries and Cemetery Division. Thank you.
Well, good morning. I am certainly glad we started with the other business segments first so that we didn't kill the good meeting vibes right off the bat, because that'll be this part of the presentation. I'm Andrew Quist, president of Security National Mortgage, and we are a single-family residential mortgage lender. We get the opportunity to help people on one of the best days of their lives. We enable people buying a home, and as we like to say, we turn houses into homes, and we helped over 7,000 people on one of the best days of their lives in 2023. So that's something I am very excited about, and I know all of our employees take a lot of pride in as well. 2023 was a difficult year in the mortgage industry, no bones about it. In fact, strictly financially speaking, it was the worst year in Security National Mortgage's history. But I am very proud of the way our 900 employees navigated those waters. We have a fantastic team, and despite the financial results, I am quite proud of the way our team handled one of the most difficult markets in the history of the United States mortgage market. So hopefully those of you listening online here in the room that are associated with the mortgage company take great pride in what you were able to navigate in 2023. Because many mortgage companies, including a large competitor of ours, are no longer in existence. One just down the road from here sold and is not an ongoing entity. And there's been many companies that have had to fold in the past couple of years. So again, I am proud of our employees despite the results. So with that, I stood up here last year and showed a slide similar to this and said, hey, from 2021 to 2022, we had a 49% decrease in the mortgage market. That was a pretty big drop. That was a halving of the market. And I wish I could say that it got better, but it didn't. We went down. This is total mortgage originations in the United States. Total mortgage originations went down another 29% to 1.639 trillion. And so there has been a cumulative decline of 63% in the mortgage market over the past 2 years. That's a difficult decrease in volume to scale to. It is something that has taken a lot of time and effort from our team to try and rescale our operations in that type of environment. So what does it look like going forward now that we've had that 63% drop? Well, the Mortgage Bankers Association forecast for 2024 total originations is 1.8 trillion. But at the same time last year, the Mortgage Bankers Association forecast for 2023 was 1.8 trillion. So it's looking like the market is going to be about the same size as it was last year. Now, first quarter, we actually do have first quarter volumes from our trade association, the MBA, as 377 billion. That's actually a 13% increase from first quarter of 2023, but they are forecasting a 7% decrease in the second quarter. So first half originations are looking like they're going to be about the same. So how did we, Security National, navigate those waters? Well, before I do that, I do want to touch on not only volume, but the number of homes sold. So this is the numbers I was giving previously was total originations. One more thing I wanted to add here before I get into how we navigated it was the number of homes sold is sometimes masked by the origination. So in 2023, there was 4.09 million existing homes sold. And that was the fewest number of homes sold in 28 years. 1995 was the last time there was fewer homes sold in the United States. So not only did originations drop, but the number of homes sold dropped as well. So now I'll get to how we navigated that. At Security National, our origination volume was 2.17 billion. It was down 35% from 2022 and a cumulative decline of 61%. So if you remember from my previous slides, nationwide originations were down 29% year over year and down 63% over the 2-year time period. So we fared a little bit worse when it came to originations and total origination volume year over year, and we fared a little bit better over the 2-year time horizon. For the first quarter, our originations were 465 million, down 12% from the first quarter of 2023. Now, as I mentioned earlier, nationwide originations were up 13% from the first quarter of 2023. So as far as originations go, we fared comparatively worse. And the reason for that is after the first quarter of 2023, we simply had to move on from several large producing groups that could not catch the vision of profitability at Security National. So we cut ties with those individuals and continued to recruit. And while it hurt us significantly, as you can see on originations, it helped us significantly on our profitability, which we'll see in a few slides. Now, from that, we continued to recruit, and we have had very good success recruiting at Security National over the past year. And so sequentially, if you look at this, our origination volume was actually up 1% from the fourth quarter of 2023, while industry originations were down 6%. So year over year, the comparison does not look so favorable. When looked sequentially in a more recent time horizon, we've actually been increasing our originations while the industry has been decreasing. So it should come as no surprise, given those numbers, that our market share decreased in 2023, down to 13.2 basis points. So what this is just Security National's originations divided by the total originations in the mortgage industry. In 2022, that number was 14.6 basis points. So we did see a decline, but we do still have a higher market share than we did in 2021, even when our volume was approximately 3 times larger than what it is today. So, to the financial results. In 2023, Security National Mortgage Company lost $17.4 million. As I mentioned earlier, that was the worst year in the company's history. That's compared to earning $14 million in 2022. So a decline of $31.5 million. Now, what I do want to remind you is last year, I got up here and told you about the sale of our MSRs, our mortgage servicing right transaction. So if you strip that out, so excluding that gain from our MSR sale in 22, our operational net income was a negative $17.6 million in 2022. So snapping back, we improved ever so slightly by $200,000, but call it flat. We operationally lost the same amount we did in 2022, but on 35% less volume. So again, that's where the pride in the results come from our group, is that we decreased our volume by 35% and we're actually able to decrease our net loss by $200,000, seeing 35% of our revenue disappear. So moving on to the quarter, as you can see, I mentioned earlier, our originations were down 12% year over year, but we have halved our loss. Our loss for the first quarter was $1.9 million compared to 3.8 in 2023. And again, that's with 12% less originations. And so again, those groups that we moved on from after the first quarter of 2023 actually increased our profitability. And one thing I certainly wanted to highlight here, I typically don't break out monthly results in a quarter, but this one was significant enough that I wanted to. In March 2024, embedded in that first quarter number, Security National Mortgage Company actually made $721,000 for the month. Yeah, there's a clap. This is our first, excluding our MSR sale, this is the first month that we have made money in 2 years. It's been 24 months going without an operational profit in its Security National Mortgage. And so to me, I am quite optimistic with the direction our company is headed. I see the sequential increase in growth quarter over quarter. The fact that we're able to, even in environments where originations are not overall increasing nationally and originations are forecasted to be approximately where they were in 2023, as a company, we are on a much better trajectory, and I'm quite optimistic about the future of Security National Mortgage. So with that, I look forward to my report in 2025, and I know that we'll be reporting much better results than we did this year. So thank you very much. Yeah,
We appreciate that work. Let's give our presenters a little pretty, it's a pretty dead group this morning, even for a company that deals in funerals. That's anyway, but I am so now we'll move on to my report. First of all, do we have any questions for those who have given reports? We didn't really take any time. Seeing none. Our motto is excellence at our company. That should speak for itself, and our goal is growth. What does growth mean? We define it in our company as if we're not growing by 10%, we're not growing. I mean, inflation last year was what, 5-ish? I don't know. I've heard so many inflation numbers. So if we're not growing by 10%, I don't believe we're growing. And if we are growing by more than 20%, I actually start to get a little concerned, because sometimes you can outstrip your capabilities if you push on the accelerator too much. Let's go to so in that growth, I've been a little frustrated. Let's go to the document, our first quarter press release. Can we put that up, please? Or do I have to do that? If I have to do it, we've got a problem. Okay, so what I would say, let's see, which one is there we go. To me, I'm pretty frustrated, actually, because I believe that we should be seeing asset growth in the ranges I've talked about, and we should be seeing top line growth in those ranges that I've talked about. And it's frustrating to me that we have not. Now, it is pretty consoling, actually, that our bottom line results have reflected those growth numbers. So from a profitability point of view, as money in the bank point of view, we have reached those targets. But I think that those eventually, if you're not growing your top line, if you're not growing your asset base as a financial company, it becomes a problem at some point. So we're pretty focused right now on both top line and asset growth, but we're dealing with markets, particularly the mortgage side, that have provided some pretty good headwinds over the last 2 years. For example, the decline in our asset base that Mr. Sill mentioned of nearly $100 million is simply due to fewer loans held for sale on the balance sheet at the end of the day. Our reserves have grown on the life side. Our asset base on our cemetery and mortuary side has grown, but loans held for sale have declined, and that's simply because pick the decline number you want to use, whether it's 60%, whether it's a 30% year over year. That's been a pretty healthy decline. One thing Andrew did not bring up is on the mortgage side, the Mortgage Bankers Association, they have a metric called production income. I think I'm forgetting the statistic now, so Andrew, please correct me, but it had been an anomaly, or production income had never been negative for, I believe, 3 months in a row. Is that the statistic?
From 2008,
there had never been consecutive quarters of negative production income since 2008. Never. The last 2 years has been negative production income, 8 quarters in a row. So from 2008, there had never been sequential quarters of negative production income, and only 3 total since 2020. Should we call it 2022, or is it 2020? Anyway, we'll call it 2022. We've had 8 consecutive quarters of negative production income as in the mortgage space. Does that make sense? So as a company, when we sit on our three business segments, mortgage banking, cemetery, mortuary, and life, one of those stools is one of those legs to the stool has been pretty challenged in its environment. Now, in this environment, I should stress our goal is still growth. We continue to invest in growth. And I believe it's fair to say, I was just adding them up in my head, Mr. Andrews, so please correct me if I'm wrong. But I believe in the first 3 months, we spent probably $1.5 million, maybe a little bit more, simply on recruiting expenses at Security National Mortgage. Those are reflected in those lost numbers. Those numbers are, we expense those recruiting costs as they are incurred. So actually most of that loss, that $1.9 million loss you see in the first quarter, had we not been recruiting, we'd be close to break even during those first 3 months. But our goal is growth. Our goal is growth. And we believe right now, I'm addressing the mortgage space and to some extent the insurance company space. I'll address that in just a minute. We're looking at a disorganized market, a jumbled up market. So we believe now is the time for us to be recruiting those people who will provide that basis for growth as we come out of this disorganized market. And we are investing heavily in that. Now, the market is not as disorganized on the life side. However, I would note two major players have exited our space in the last 2 weeks. They could not be profitable, yet we have been. So what I'm trying to point out is that on the mortgage side, we're investing heavily in growth for the future. On our other two segments side, the investments we've made previously are starting to blossom. And as a company overall, our profitability is up more than that 20% number that I had referenced. It, I believe if we're not growing at least 10%, we're not growing. If we're growing more than 20%, other than profits, I'm okay with profits growing 20%. Anyway, I didn't say that very well, but I'm pleased to see our profitability has grown how it has in the first quarter, given the investments we've made. So, but how have we made that growth? This is the press release that went out with our Q1 earnings. Since total revenues only increased 2%, that's talking about the company as a whole. Well, let me start with the bottom line. We increased earnings 507% over Q1 of 2023. That's pretty good. I think that will give our team a little. So earnings increased over 507%. In 2023, we were at $1.5 million. 2024, we're at 9.6. These are pre-tax numbers. That's a pretty good increase. But total revenues only increased 2%. So earnings increased 500%. Revenues only increased 2%. That means that our growth in profitability came from our better utilization of our costs, rationalization of our costs, control of our costs. In a nutshell, revenues increase, costs decrease. While cost control is important, we believe we still have a ways to go. We are focused on top line growth. Mr. Moody. That's the first little green leaf.
They've offset mortgage until the mortgage was able to calculate. So for those listening in, they need to know this is a very stable ship.
Oh, yes. A great segue from Mr. Moody. Our growth, our bottom line growth, 500% Q1 over Q1. Our mortgage company still was running at a loss, but what that shows is the financial stability of our company. Because as the mortgage company is running at a loss, the other companies are actually having their best years ever. And that goes to the quality of the teams and the stability of our organization. Lastly, actually, I think that was about it. I thought I had one more point in reading my notes. I do not, other than saying that as we see companies exit both on the mortgage side and on the life side, we are having our best years. Not necessarily on the mortgage side, but as a company as a whole, we just experienced our best quarter ever. So I hope that made sense. With that, are there any questions? Please.
Below a 3.5% rate on the mortgage, so those people simply are not going to move. So there's going to be a lot lower transactions like headed forward. If interest rates were to go up instead of down on the mortgage side of things, so just kind of curious to hear what you see as that Fed cut rates and mortgage rates come down, and that originations that are called at around $1 trillion a year in the U.S. Go up, or are you thinking that a more normalized environment, given what's gone on with rates over the last 15 years, could actually be where maybe there's only $1.3 trillion of mortgages here? Because I actually think that could be very tight, given there are so many people that got low rate mortgages that's just not going to turn them. And if you throw out 2019, 2020, it's not a bad year over even the last 15 years in mortgage origination. Kind of curious what you hear or what you're thinking of as a normalized environment. And that's one of those guys see the company is that you build this up and it gets worse, that becomes a real drag.
Yes, the question being, let me try to summarize that in case those listening in couldn't hear that, is what if mortgage rates go up or the market stays at a 1.8 trillion origination market? Does that bode ill for the growth that we are spending our money to accomplish? First of all, if you have a crystal ball on rates, I'd really like to see that because that could be very helpful. I think a couple of things. You see two forces actually occurring in the mortgage banking, or I'll call it the housing space, that maybe mortgage banking follows. One is that you still have a country, let alone a state, where you have huge unmet housing demands. I think the popular notion is in the state of Utah alone, we are like 30,000 households away, 30,000 houses away from meeting the building demand. So you've got this demand that's there. Now the question is, can people qualify given their average income, et cetera? That's problematic. To be honest with you, you are seeing not housing prices decrease, but you are seeing size of houses and types of houses. In other words, more townhomes, more condominiums, denser developments. So you're seeing that kind of household formation. Now, our tactic there is that we work with a lot of builders. So we're trying to get into that chain of commerce earlier rather than just waiting for the realtor who brings us a deal. And I think, I don't know how many builders we do business with, Andrew, we would be, I don't know, probably 17, 18-ish. Secondly, in this inflationary environment, and I'll allow Andrew to make his comments, because I think he stood up not just because he wanted to stretch his legs, but you're seeing a curious phenomenon, or yeah, I would characterize it that way, where we're continuing to see home price appreciation. So if you go back to 2021, when rates were extraordinarily low, arguably values should have been at their highest, rates started going up. You're still seeing year over year home price appreciation, depending on the study and depending on the geographic region within the country, somewhere between 5, some even 10% per year home price appreciation. Why do I bring that up? Because people are beginning to refinance volume in mortgage banking. I think in the latest MBA studies is probably about 26% of total transactions right now, even though rates are high. So what's the refi? Well, some people are just getting their cash out. It's just a cash refi. Others are having life events. Maybe they have a baby. Maybe they need to increase the size of their house. In other words, there's a growing transaction volume that's related to refi that appears to be growing despite the majority of the houses in the United States being financed in the 3% rate right now. And on top of that, you still have this demand metric that we need more houses. So I believe we may be stuck at the 1.8 trillion. I think inflation will grow that a little bit. But what our goal is to get more of that 1.8 trillion. If we are stuck at that 1.8 trillion as an industry, our goal is to get more of that 1.8 trillion than what we've had in the past. And we do that by hiring the best people right now, if that makes sense. And then Mr. Andrew.
Well, just I think that is a good question, Will, of where that market is headed. Who knows? I have been focused at the mortgage company of making sure that we're profitable in this environment. Certainly not counting on whatever at the beginning of the year, end of last year, 6 rate cuts. Now we're talking about 1 rate cut. To me, that really doesn't matter. We need to be profitable in the environment we're in currently. And so we are not building a company for a different rate environment or a different rate size. And so to me, that's goal number 1, is to structure our company so that we can be profitable in any environment and ensure that we can be thriving in any economic environment. So that's number 1, is we're not going out and building a company for a certain mortgage size. Certainly, and this is why I focus heavily on our market share more so than originations, is to Scott's point, we want to be taking more of that market share regardless of its size right now. So that's number 1 in our growth, what we're trying to accomplish. Number 2, as far as transactions, yes, 1.8, I don't think it's a low number over the past 13 years, but it's not abnormal over the past 13 years. What is abnormal is the chart that I showed on homes sold in 2023. So where we're at almost a 30-year low on number of homes sold, can we go lower than that? Sure, we can go lower than that. But it's pretty exceptional right now where we're at, because in 1995, I believe the population of the United States was like 265 million. Right now we're at about 335 million. And so we're having the same number of housing transactions when we've increased the population roughly 25%. I can't do the number off the back of my head right now. But to me, there's going to be a certain number of housing transactions that just occur because you have a population. So they may not be inflated as they were in the 2020, 21 time period. But I think you're going to have, and we very well may have hit kind of that baseline number, because when you're at 30-year lows, that's pretty depressed as it is right now.
Thank you. Excellent questions, excellent points in my view. I will take the opportunity to say, in my view, what Mr. Andrew and Mr. Joel Horward, who was not able to attend today, what their real task has been actually, Will, and as I think about tasks and not talking numbers now, but talking about philosophies, many of our people at SNMC at the beginning of 2022 said, well, geez, if we can just hang on until the year end of 2022, the rates will be coming back down. We'll be back, it'd be great. And the problem with that sort of thinking was that, okay, I know this loan officer, I'm paying him too much right now, but I'm going to hang on to him because in 6 months, 9 months, 12 months, market's going to turn and he'll pay for himself. Maybe I'm going to hold on to this processor, this underwriter, this loan officer's assistant, because in 12 months we're going to be back in refi territory. So what Andrew and Joel and our team at SNMC, in my view, the job they've had is, hey, forget about refis. Forget about a refinance boom, I should say. We need to be profitable today, and we need to take steps to be profitable today. And what that has required is a shift in thinking of many of our people at SNMC. And the pruning that you've seen are basically people who wouldn't make that shift in thinking. And so that's why you saw volume come down. Andrew mentioned January 2024 compared to January 2023, mortgage industry volume was up, our volume was down. That reflected that pruning, trying to change people's perceptions. And you can see the success in that inflection point, because from December 2023 to January 2024, mortgage volume industry-wide declined by 6%. We were up 1%. So you're beginning to see those green leaves of the thinking and our restructuring to where we can be profitable in any environment. And that's our task. That's our task. So whether we sell more homes as a country next year versus last year, whether there's more refis, whether rates go up or down, I don't know. But there's going to be a volume of transactions. And if we keep getting more than our previous market share, we'll do okay. And that's our goal. That's our goal. Please. Turning age 65. Turning people like me. Yes, and I would say that the comments did not fall on deaf ears. We have put together some reverse mortgage teams. I would also note, though, that a reverse mortgage is not just a function of equity in the home, it's also a function of the interest rates. So as the interest rates have gone up, yes, the equity's in the home, but in a reverse mortgage transaction, when you put those two together, the benefit isn't as great as what it was actually during the low interest rate times. And I see Andrew has wants but to your point, we are very aware of the demographics, and to the extent we can, we're trying to take advantage of that.
Well, we do have a microphone, and I apologize for not handing this to the people asking the questions earlier, so those online could hear. But what I would say is I think that's a very viable market and something that, yes, we're actively looking in. I do believe your loan officer that focuses on reverse mortgages is different than your loan officer that focuses on forward mortgages. I don't think there are very many loan officers that focus on the same markets and do both equally well. So to find a better depth in that reverse mortgage market, I think you have to go out and find those specialists. But that's something that we're absolutely looking at and trying to do.
Excellent question. Excellent question. Any other questions? Yes, Mr. Kim. Wait, we're going to get you the mic.
Finally. Not to carry across the United States.
My question is, the two companies that have gone out of business, are we looking at ways to absorb their businesses?
Yeah, I think it's fair to say that. I don't want to make forward-looking statements, but yes, we look at the opportunities. Yes is a good answer. Well, to go a little further, the reasons these companies went out of business was because they couldn't make money in that business. Sometimes that goes to how they price their products. Sometimes that goes to the investments they made. Sometimes it goes to their operational factors. If they price their products improperly, i.e., if you have a given block of insurance business that is underpriced, that becomes a more difficult transaction to accomplish, not only for us, but for anybody, right? Because it just wasn't priced properly to begin with, and you can't change that. Good question, though. Good question. But yes, we are looking at that. One last question. We'll go one last question.
One great thing you guys have done over the last 50 years or so is make real estate investments. You own a lot of land around the cemeteries that you own that were purchased 30, 40, 50 years ago that have been phenomenal investments. You've developed some of the land that you've owned and so on. It looked like in the first quarter, there was kind of some activity as it relates to real estate. It looked like the Election Road property might have sold based on some public records that I was reviewing. Just kind of, and then at the same time, it looked like your investment in residential real estate increased in the first quarter. Just kind of curious how you're looking at the real estate that you hold, and including these buildings, the building we're in now and the building across the way and the land that's on this parcel, how you're looking at real estate and what maybe triggered some of the movement recently.
Yes, good, excellent question. I think everyone could hear the question. Let me address Election Road to begin with. That's what we would call our Wasatch 16 building, which was, for those in Utah, that was the building contiguous to the aquarium in Draper. That business park, if you go to that business park, that's pretty empty. There's probably 7 other similarly sized buildings in that business park. Those are all empty. Our building was fully leased. However, the primary tenant approached us and said, we want to buy the building, and if we can't buy it, we think maybe we need to move. And we could buy it and take a slight profit, or we could continue to hold and go find a new tenant for half the building in an empty business park. Given those options, we elected to sell it and take a slight profit. There's one chain of thought that says you never go broke when you take a profit. And we looked at that and felt that was appropriate. The number of single-family residences that's going on our books, I don't know.
Development loans.
Oh, go ahead, Mr. Garrett.
Sorry, yeah, that the increase in single family would be just land that's being developed. So we increased development of raw land for single family homes. So that would be the huge increase.
Yeah, I think it's fair to say when you talk to most builders in Utah today, even in this environment, they will say their problem is lots, that they can't get lots to build on. I don't know if that's completely true, but certainly there's an element of truth to that. To that end, we've made some significant investments in acquiring land and developing that land in the lots. And we feel those investments will pay off handsomely. With regards to the commercial real estate, I mean, you see the same popular press we do, that's a little moribund. I'm glad in these buildings we have here at Center 53, we have some long-term leases intact. And I think that that phenomenon we're seeing now, that too will pass over time. Thank you. Excellent questions. Not meaning to prolong the meeting, but happy to entertain anything else. Seeing none. Thank you for those questions and that participation. Let's see, I've got to get back to the right script. We'll now ask for a report from our committee on attendance and balloting. Our committee chair, Mr. Richard Dahl.
Mr. Chairman, all four of the nominees for the Board of Directors of Security National Financial Corporation to be elected by the Class A common stockholders voting separately as a class have been elected by a majority of the Class A common stockholders represented either in person at this meeting or by proxy. Additionally, all six of the nominees to be elected by the Class A and Class C common stockholders voting together have also been elected by majorities of both the Class A and Class C common stockholders represented either in person at this meeting or by proxy. The proposal to ratify the appointment of Deloitte & Touche as the company's independent registered public accountants for the fiscal year ended December 31, 2024 has been approved by a majority of stockholders represented either in person at this meeting or by proxy for both the Class A and the Class C common stock.
Thank you, Mr. Dahl. And I would also thank the Committee on Attendance and Balloting. The chair will now entertain a motion as to the approval of the actions of the Board of Directors and the management of the company taken since the last annual meeting.
Jamie Beard, the stockholder of record, the actions of the Board of Directors and management of the company, the last annual meeting.
We have a motion that the actions of the directors and management be adopted and ratified. I have a motion to that effect. Do I have a second? It has been moved and seconded that the actions of the management and the Board of Directors since the last annual meeting be adopted and ratified. We'll now vote on that motion. All those in favor signify by saying aye. Any opposed? The motion carries. The chair will now entertain a motion as to the adjournment of this meeting of the shareholders.
Mr. Chairman, my name is Richard Dahl, and as a stockholder of record, I move that this annual meeting of stockholders be adjourned.
I have a motion that the meeting be adjourned. Do I have a second to that motion? We have a second to the motion to adjourn the meeting. All in favor signify by saying aye. Opposed, nay. The motion carries. The meeting stands adjourned. Thank you very much for your participation.